Awesome, done. Back at it again, right? So today's session, what we're gonna cover? Well, we're just gonna basically add up everything we've learned so far and apply it on the charts, on the pairs, right? So we're going to basically just mark up the charts with all the confluences we've learned so far, right? And then once we finish that, we're going to actually that's what we're going to do today. We're going to take some questions and we're going to work on whatever the people in this class needs help with, right? So for this session, I want people to participate. So I'm gonna ask a question and I expect you to either unmute your mic or type it in the chat, right? When I do, or if I do. So let's get straight into it. What pair would you like us to mark up? Somebody. Romeo, what pair? All right, somebody set a pair, so let's see. EURGBP, okay. And then USDJPY, all right. So we're gonna start with EURGBP. So what I'm gonna do, double click, remove all drawings, right? The indicator I have on my chart is called bullish and engulfing patterns auto detection, right? What that means, the engulfing candles are gonna be red for the bears, and the engulfing candles for the bulls are gonna be green, and then the regular candles are going to be blue and black. That's just how I set it up, right? If I didn't set it up this way, the regular candles usually black and white, right? Why I have my chart in this color? One, you want your chart to be very clean and simple. Basically, once your chart is clean, it's easier to navigate the market and it's easier to identify certain things, right? So having a white background with these candlesticks definitely helps me to view the market more efficiently, right? So this is how my candlestick settings is. I have the body for the bull candles blue and the bear black, borders black, wick black. Last value line is this line that shows the last value. I have that on green, and then I have the rest of options off, right? These are the other options I have. You could pause the video or screenshot it, the recording, if you want to copy this appearance, right? I have the background white, vertical grid lines invisible. You just drag the opacity to the most left to 0. I have the horizontal line invisible and the rest of options off, right? The crosshair, I have it light gray with dashed lines. Text, I have it black lines. I have it black, right? Yeah, so I don't have any events on the chart. So you know how at the bottom of your chart you might have these little flags that just shows you the news events, right? Once you have the little flags, it's gonna show you the news events coming up for that day, right? I have that off because I try to keep the chart as clean as possible, right? Yeah, so I'm going to make a list. I want, we're just gonna name a couple confluences, right? I want everybody to name one, all right? So somebody give me the first one.
Multiple time frame analysis.
All right, multiple time frame analysis for short, MTE.
Trendline.
The second one. Okay, Douglas says trend lines, right? Says
Overall trend.
Romero says what?
Overall trend.
Trends. Okay. Anything else? Support and resistance. Douglas says support and resistance. Say that again.
You can look for a breakout.
Okay. Market structure, right?
Check the chart.
Quarterly figures. Okay, we have trend lines, resistance. Is there anything else that we've learned so far?
Fibonacci doesn't count?
Yeah, I have fibs like FIBS.
Oh, okay.
Right? Okay, we're gonna work with just that, right? For now, right? So yeah, so let me put this right here. So yeah, let's put them in order. Actually, we're just gonna leave them like that. So when we approach the market, first thing we want to do is multiple time frame analysis. You want to know what's going on at every time frame, right? So what we do, we go to the monthly time frame just to assess what's going on the higher time frame, right? Now, besides drawing up the confluences, you have to also try to understand the market, and you have to also try to use some logic, right? So multiple time frame analysis. On the monthly time frame, we want to go through all confluences we listed here, right? You don't have to necessarily draw them on a chart. You just want to be aware of everything that's going on, right? So on a monthly, let's just have a look at our support and resistance levels, right? To help with that, you could use a line chart if you find it hard, and just draw it on the sharp levels, right? You could use the different tools, and it's always good to have your tool kit so that you don't always have to go over here and search for your tools, right? You just click the tool, you put a little star on it, and it will be added to your toolkit, right? Toolkit could very much vary. So here we have, and we're going to look at Euro NCD. Okay, so here we have the monthly support and resistance level on EURGBP. Now, this support and resistance level, according to our rules, is not broken until an entire candle closes on the other side. And this is the monthly time frame. Okay. Now, just for reference, I'm going to draw the other support and resistance levels, right? When you're drawing your support and resistance levels, you want to draw the most recent ones because that would be probably the most valid or the most, accurate ones, right? So the most recent support or resistance levels are those next to the market would be these. Now there are more, right? Like this could be a level, and this could be a level. But you don't want to crowd up your charts with all these levels. You just want to draw the most important ones, right? Or the ones the market that next to. So here we have the monthly support and resistance that was marked up, right? For reference, we saw we had a reaction here, a break and retest, right? On the weekly time frame. So now we go to our next confluence. We have the monthly support and resistance levels down. We probably want to draw the weekly, or just be aware of its location, right? We're on the daily time frame. So let's go to the weekly. We go to our line chart. And add a weekly level. Now, a lot of the times what I might do, I usually leave certain objects on their designated time frame unless it's important, right? So I'll leave the monthly on the monthly, the weekly on the weekly, the daily on the daily, unless it's important. Okay. So we're aware of our weekly support and resistance levels. Significant support and resistance levels, right? Now, just sticking with support and resistance, we go down to the daily. And you have to remember it's like a zone, right? So we could see the market reacting. It's reacting to the levels. So we know, okay, the levels are valid, but obviously a reaction is not enough to place a trade. So if you're a higher time frame trader, you'd probably stick to the monthly, weekly, daily. But if you're intraday trader, you could go down even further to the 4 hour and 1 hour, right? However, if you're trading a lot of pairs, you would probably want to trade the higher time frame because it's not going to be easy keeping up to date on the hourly charts for 30 pairs. Whereas if you're trading the daily chart and above, then you could just check these 30 pairs once a day, because it takes 1 day for a daily candlestick to close. So EURGBP, this is your daily support and resistance level, right? Your 4 hour level. Be right here. We could already see we had 1, 2, 3 reactions, right? If you're a trader that just takes support and resistance levels, then you would have probably took these break and retests, right? Also, this would have been a level because remember what I said. Once it's pointy, value a peak, you get that sharp move, you could consider that a level, right? And we could see, okay, I'm gonna change the forward to a different color. We could see the reaction. This right here could be considered consolidation, even though it's a little mini trend because you have a high, a low, a low, a high, a low, low, right? But the price is definitely moving sideways. It is not moving higher. It's moving sideways. So that's another way to identify consolidation, right? So now you're near the price. We're gonna mark off our quarterly levels, right? Now you don't just want to put quarterly levels everywhere on the chart. You want to put it where it's necessary because a clean chart is what you need. You probably don't even need to have these support and resistance level lines. You just need to be aware of them and where they're located, right? So we're gonna start our quarterly levels at the wrong numbers. So we could see this pair is in the 80s cents. So we're gonna mark the first level at 83 cents, right? 83. You could either click show price, it's gonna show the price, or you could take off the price and leave it as show text. It'll just be a text on the side. You can also edit the size of the number, right? And the size of the line, or you can put it as a dash line or a regular line, right? So we're gonna keep it as a regular line. Next, we're gonna add, because this is in the 80s, we're gonna add, if it's 83, we're gonna add 82 cents. Now, if you put the line anywhere on the chart, you don't necessarily have to drag the line to 82 cents. You could go to coordinates and just type in 82 cents, and the market is gonna put the line at 82 cents. Okay, 82 cents is at the bottom, so let's do 84, right? Okay, so clearly quarterly figures tend to work because the quarterly figures lines up exactly with support and resistance, right? So that they are their own support and resistance. Quarterly figures is a confluence. Now let's see what's the difference between 1 cent. So the difference of 1 cent is 100 pips on your GBP, right? So if you could predict the movement of 1 cent on your GBP, then you could get 100 pips. So yeah, we're just gonna put the two most valid, most recent, most relative quarterly figures on, right? All right, so when you do analysis like this, you have to make mental notes. One mental note could be, from observation, you could see that EURGBP tends to react to quarterly levels because certain pairs gravitate to certain confluences. And EURGBP, we could see here, EURGBP likes quarterly levels, right? So EURGBP likes to move in 100 cent, 100 pip ranges, right? Basically from 100 pip level to the next. Because as you can see here, if we highlight the quarterly level, I want to highlight it in blue, we could see the market reacting to these levels, right? This is the 4-hour time frame. This would be 84, 0.84, right? And this would be 0.85, right? 0.85. Let's see what this looks like on the 1 hour. Market reacting. So let's say you identify this as a downtrend and you see the market coming up to the quarterly figure, you get short. The market break and retest the quarterly figure, short. The market's reacting off of these quarterly figures, right? So we know quarterly figures work. Support and resistance work, right? You pick the pair, we just enter the numbers, and we see the market automatically reacting. So yeah. Back to the situation at hand. No, you don't want to, as like I always say, you want your chart as clean as possible, right? So you just want to make mental notes. Or, you know, like if you're still learning, yeah, you can mark it off. But essentially, you want to be in a position where you can have a clean chart and identify all of these areas, right? So next, we're going to do, we have our quarterly figures. We have our support and resistance. For this little area right here. We'll do trend lines now, right? So on the monthly charts, you don't necessarily have to draw a monthly trend line, but you could draw it out just to be aware of what took place, right? So the monthly trend line would be here. Now, I want somebody to tell me why that is where the monthly trend line is. And why is it not here? Right?
There wasn't another higher low made?
There wasn't another higher low made?
Well, I'm saying it wrong. I can see it, but I'm not describing it the right way.
Okay, somebody describe it the right way then. Why is our trend line located here?
Two most recent higher lows.
Yes, right? The two most recent higher lows. So we see that this trend line is broken. This trend line was broken and it was retested, right? So we know based on observation, one, we had support and resistance levels broken on the monthly. Two, we have trend lines broken on the monthly, right? So that's telling us, this pair is going down. I mean, even though the candlesticks, the monthly candlesticks looks like it's slowing down, but based on mechanical observation, you know, based on our checklist so far, it looks like it's going down, right? So let's hop on the weekly and draw out the weekly trend line. So for the weekly trend line, if we stick into the rules, the two most recent lower highs, right? Now, we had the trend line break and retest. The trend line was broken with this candle, close entire candle on the other side. So we have a weekly trend line broken. So that kind of gives you potential hope of an uptrend, right? So now let's go down to the daily. Now a while back, I believe I sent out a long on EURGBP down here because of this weekly trend line broken and this market structure and this demand zone, right? And I think this was the pips up to here. But anyway, so right now we're going to draw our daily trend line, right? So on the daily trend, the market, this would be the daily trend line, right? Because it's the two most recent lower highs in this daily downtrend, right? The weekly time frame is still in a downtrend, even though we had that weekly trend line break. We didn't have that weekly market structure break, right? So we could go down to the 4 hour, you know, and draw out our valid trend lines, right? Now if we stick into the rules, let's see. Our 4 hour trend line will look something like this. The most recent high below, we have the 4 hour trend line broken, right? Now, I don't think this is complicated. We're just drawing out what we learned on this page, you know? And then basically you would clean up the charts and you would form some sort of bias, whether or not which direction this pair is going to go and where is probably the best place to enter. You see, you can know which direction a pair is going to go, but then you have to find out which direction, where would be the best place to enter on this pair, right? Okay, so I left the trend line solid because this trend line is not moving. And like I said, if you're following the rules, high, low, lower, high, lower, low, trend line, right? I'm just hopping on the 1 hour to see what it looks like. Okay. So if you had to place a trade merely on the fact of support and resistance levels and trend lines, I want you to look at this price over here and tell me where would be your best price to enter at. Stop loss and take profit. Which direction? Somebody. Just using support and resistance.
I'll wait till it bounce off the trend line and enter so back down.
What price?
Let me load it on my computer and see.
8395.
I would say go short and
Okay.
probably enter somewhere. I can't really tell the figures.
Okay, Rich said 8395, right?
Yes,
Maybe
right after.
838.
Aaron, what did you say?
No, I wasn't seeing the figures properly.
Can you see it now?
I'm thinking,
Nick, what you were saying?
838.
I would have done 838.
Where it would touch the trend line.
Yeah.
For the third touch.
Yeah, for the
Yes.
third touch, yeah,
And you
right
wait for
there.
it to bounce off back.
Or even probably 838 or even somewhere between 838 and 8375.
Where's 83? Oh, there's solo. Okay, well, maybe a little bit high, 8385 or something. But yeah, wherever it touches the trend line, yeah,
For the third time.
but it did touch, yeah.
Okay. No. All good answers, right? Let's be aware the market could move any amount of pips at any time. So, with these entries right here, you have 1 point because you have one confluence, right? Yeah, you could enter, but you have one odd at your favor, right?
Well, we have two. We have the trend line and then the quarterlies.
Oh, yes. Very good, Rich. Very good, on top of the ball. All right, so we have two, right? Quarterly figure and lower time frame quarterly figure and trend line. Good. So any of these entries would be good, right? But the best entry would be up here, right? Because not only do you have the quarterly figures and the trend line, you have support and resistance, right? So if the market gets up there, you can take the trade. However, in trading, you would find your best entry and then you would find your second best entry, right? If the price continues to push sideways until it gets to this area, then this should be a second best entry. However, the price is very well capable of pushing straight up to enter and then drop it, right? Like a lot of the times, if you're paying attention in the signal room, you might see me send a signal that is 100 pips away from entering. And you might think, well, this trade is not going to enter today or anytime soon. And before you look, the market shoots down with a wick, hits the entry, and then it goes in whichever direction, right? So one lesson you should always be aware of, there's no price that is too far away for the market, right? The market is capable of moving to any price at any amount of time, right? So, okay, we have the trend lines, we have the support and resistance, and now we have the quarterly level. So what we're gonna do, we will just add a Fibonacci to this, right? So now we have 3 reasons to enter on this zone. You have your trend line, you have your quarterly levels, and now you have a Fibonacci, right? So this is all good news. This is telling you, okay, the odds are in your favor. You have 3 odds in your favor, maybe 4. Let's include market structure, right? Trends, right? Fibonacci, we have the golden ratio here. Trends, we have a 4-hour downtrend. Market structure, downtrend market structure is intact. Support and resistance, we don't have any support and resistance levels here. Quarterly figures, we have quarterly figures. Trend lines, we have trend lines, right? Multiple time frame analysis. Okay, we know the monthly is down. We know let me double check. Okay, we know the daily is also in a downtrend, right? It's only the weekly trend line that was broken. So we have a couple time frames aligned: monthly, daily, 4 hour, probably hour, right? So multiple time frame analysis, the odds are in our favor. Trend lines, odds are in our favor. Trends, odds are in our favor. Support and resistance, not there. Market structure, odds are in our favor, right? And now quarterly figures odds are in our favor. So we have 1, 2, 3, 4, 5, 6. 6 reasons to enter short in this area. Now you as a trader, based on everything you've learned so far, you should be able to come to the market and use this information to gather that bias, right? And this is not even everything you're going to be taught. This is what you're taught so far, right? The only how you're going to be able to find these setups is by doing what we call chart time. You basically serving a sentence. You're going on a chart, spending time analyzing pairs, marking up the chart, and watching it play out, watching it react to your zones, making notes. You learn something new, okay, you know. So yeah, so let's say the market does come up to this stuff, right? Actually, let me go back. Right? You would enter your shot probably at 61.8. Stop loss above the trend line, or if you want to play it safe, above support and resistance, right? Your target, the next support and resistance level, or Fibonacci negative 27, or Fibonacci negative 61, which is also the next significant support and resistance, right? Also a quarterly figure. When you're doing a markup as a learner, what you just take a screenshot of this, you drop it in the chat so that a few days from now we could go back to see, okay, did this trade work out? What happened when the market got there? All right, so I'm gonna copy this chart and drop it in the student group so we can have a look at it later on, right? See what happens. Yes, so this is how you break down the market based on what you learned so far. You might see me do this, and watching somebody else do it is very easy. But then when it comes to you doing it yourself, you might see something you never noticed before, and then you're lost, you know? So it's important, if you want to make progress, practice, as Nick said, make your mistakes early. Trading Forex is probably one of the most valuable skills ever. So you can't expect to rush it, and you can't expect it to come easy. This is probably the only skill that would make you an independent millionaire, right?
No.
The only skill that could put you in a position to be a millionaire on your own, not dependent on anybody else or a business or, going out there. So, yes, we make it look easy, but it's not as easy as it looks. You have to put in the work. Just how people go to college, people go to university, they put in the work for something that's probably not going to make them a millionaire, or they're going to be having to work for the rest of their life. As a trader, you want to put in passionate work. You want to be in love with the charts. You want to marry the charts. You want to marry your pairs. Because this is going to be your bread and butter. This is going to put food on the table for you, your family, and your generations to come. So one thing I did that helped me a lot in learning how to trade was prioritize. Basically, I made trading one of the most important things in my life, right? Coming up. So you should do the same, Yeah, so we're gonna do another chat. And what you should do as homework, mark up your charts and drop it in the student group. What I realize, a lot of students, they're scared. Like, they feel like people are gonna judge them if they drop a chart and something wrong. So what they do, they send me their charts privately, right? Now, what you need to be aware of, we have experienced students who made the same mistakes as you did and who have knowledge on trading, right? That's what they're there for, So you have traders like Nick, Rich, Romare, these guys been in this group since last year, and they've served their time. So definitely everyone's here to help each other, right? As a community, as a group. So don't be, you should take advantage of that, right? Take advantage of that. Take advantage of the different opinions and drop your chats. I'm sure, I know Rich is more than ready. Nick is more than ready to give you constructive criticism, right? Nick says, make mistakes in the group, not with your money. That's a very helpful. So here's a challenge. Drop a chart at least every day. All right, because that's the only way you get better. For every chart you drop in, for every chart, every analysis you do, you get better, right? So we will fly through another pair, USDJPY. Now, never be afraid to clean up your chart completely, right? Now, you see how clean my USDJPY chart is, right? I had a trade here that dropped like 100 and some pips, but it was a great trade. However, I closed it here, around here. I didn't stick to the plan, like gold and USDJPY is kind of moving crazy. So I was like, all right, let's start to pull back out. But like I said before, trade your plan, plan your trade, trade your plan, right? This was a nice 168 pips. I didn't drop it in the signal group either. So if you've been with me since last year and you learned about supply and demand, you could clearly see the market reacted off this supply level here, higher time frame, daily, weekly. It dropped down and it also reacted off this daily supply and demand level here, right? I have my weekly levels, and for the new traders, I haven't taught this yet. I have my weekly levels highlighted in purple, my daily levels highlighted in green, right? If you want to know how I did this highlight, it is the Fibonacci, the trendline based Fibonacci extension. You can find it here, but you have to edit it, right? So it looks something like this. When you tap on it, this is how I have mine set up. I have the 0 and I have the 1, and that's all I have. The trend line on, but I have it on light. The background, I have it light, right? So essentially, it helps me draw those horizontal zones, and it highlights the numbers at the end, right? I could change the color if I want. So I have my zones color coded, right? So instead of drawing out the rectangle tool, you could use this. It just makes it look more aesthetically pleasing. And you could copy these settings, right? And how you draw the zone, let's say we find a zone here, right? You make the first click, and then you extend it out to the zone, you make the second click, and that would give you the width, and then after you drag it into the zone, right? New traders probably don't know what I'm talking about, but that's gonna be on the next few lessons coming up. Anyways, USDJPY. Never be afraid to start clean, remove all the drawings, because you can always pick up on something.
I'm looking at the USDJPY right now on the monthly.
Okay.
I see the triangle pattern from there. I'm going to send it to the group. My markup.
Okay, so Romeo was saying we have triangle pattern, right? Also known as dynamic support and resistance, right? Basically, the idea of a triangle pattern is the market will continue squeezing into that pyramid at the bottom here, and whichever direction it breaks out, you could expect a strong impulsive move, and you would probably enter on the break and retest, right? So it would be something like this. Oh. Now be something like this, right? Retest long, right? Or the opposite. But here on USDJPY, besides this being a triangle pattern, this is also a this is not well, things get a little complicated here. So you have the monthly trend, right? And then you also have this trend here. So if you were there are higher time frames than the monthly, right? There are the 2 months and the 3 months, right? So probably on the 2 months time frame, this would be a valid trend. But on a monthly, according to our rules, this is dynamic support and resistance, right? Because the trend line is drawn from the 2 most recent lower highs. So the trend line will look something like this, right? Because this is the high, the low.
That middle wick doesn't look like it made a lower low than the last one.
This one here.
Yeah.
Okay. All right. So this would dynamic a lower low, right? However, we have a high here, and then we have a low, right? So just a low. And then we have a lower high, right? And then we have a lower low because the market went lower than the previous low. But when I marked up this chart, I did not consider this candle because this candle just feels like manipulation. You know, like the markets. This is a very long wick for a monthly candlestick, right? So I had yeah. This is not normal, right? So a lot of the times, some brokers would not include this wick, or it could be some event or something happened for the market to make this sort of a wick, and it probably took a lot of people money with it, right? So when we have these kind of wicks and patterns on the chart, what one of my mentors taught me was just to ignore it, right? So this would not, if we was to ignore that wick, that would not be right. It's possible it could still be the trend line because the trend might look something like this. But we're gonna leave that as it is for now. So on the monthly here, marking support. Now I'm gonna add this to the weekly. There you can see it, right? Now, a quick way to just switch time frames if you don't want to always be using a mouse, just tap on comma. When you tap on comma, a change interval option will pop up. You can type M for monthly, W for weekly, D for daily, H4 for 4 hour, and H for 1 hour, right? Oh, no, 4H for 4 hour. And then 30 for 30 minutes, 5 for 5 minutes, 15 for 15 minutes, right? That's just like when you want to maneuver the platform quickly, right? So we have a monthly support and resistance drawn. We can tap on our weekly support and resistance, right? And put this a different color. Our weekly broken trend line. Our weekly valid trend line. Right? Up and down to the daily. So we're going to put in our quarterly levels on the daily so that it's near the price, right? Because you don't want to have quarterly levels far away and it's just on the chart and the chart is not getting to those levels anytime soon. So on the daily, we're going to put our quarterly levels. Basically, the market is moving between $112, $109, right? So let's do 112, right? Okay, we had a reaction. Let's do 111, right? We had a break and retest. Let's do 110. No, that's not it. Let's do 110, right? And let's just do 109. Right? Now you could even go deeper to 110, 500, you know, but we're on a higher time frame, so we want to deal with the most important levels, right? The significant levels, right? If we were to drop down to the 1 hour or the 4 hour, then we could put in the half and the quarters, right? The half would be 500, quarters would be 250, 75, right? So market reacting to our quarterly levels highlighted in yellow. Okay, we're on the daily. Just remind myself of the rest of the confluences, right? So okay, so you see I have, in an earlier video I explained the different tools and why I have them in the toolbox. So this is my anchored text. So once I put this text, it will not move, right? Very useful. We have our trend, we have our day, we have our monthly trend line, we have our weekly trend line. So now we put in our daily trend line, right? Which would be here. But earlier on, you know, it was kind of not all the time the market would be nice and smooth. So it's kind of difficult to determine whether a trend line to go here or not. Because in order to draw a trend line, the market had to be making higher highs and higher lows, right? The market had to be making swings, right? Pullbacks. No, I had to wonder whether or not this area was a pullback, because I felt like it was just a pause, it was just consolidation, and the market went sideways, right? So I drew the trend line anyway to see what happens. That can make it up. However, on the 4 hour trend line, on the 4 hour time frame, it does look like a pullback. And here we had the break and retest. Is this pair gonna continue to go down? Well, what does our multiple times frame analysis and the rest of confluences say? The market reacted off weekly, monthly support and resistance. Higher time frame is in a downtrend, right? The market just reacted off significant quarterly levels. So you have all these confluences pointing down. So remember earlier when I said, when would you expect a trend line to be broken? If you have all the confluences pointing down, then obviously you would expect this one. You're not even sure if this is a daily trend line. This 4 hour trend line. Let's just say it's a 4 hour trend line. This 4 hour trend line up against higher time frame confluences, you have to realize, okay, well, this trend line is no match, you know. But you know, you mark it up to see what will happen. You make note of it. Oh, computer battery low, man. Nobody can tell me that. Anyways, so we did multiple time frame analysis. We did trend lines. Now we do fibs. Let's see where the higher time frame fib is pointing. So this was almost 100% retracement, right? monthly time frame. Let's show on a monthly frame. We're gonna do from this high to this low. Okay, we passed that 6 month. So let's go back down. Okay, for this little trend here, we see we had this move here when the market started to pull back. We could have joined this field and it came near the 38.2 and near this this quarterly figure right here, right? We test this quarterly figure, we test 38.2 and then continue to drop, reacting off negative trends that won't take profit level, right? So a lot of the times you mark up a chart. When you mark up a chart, you don't just enter a trade at the market price. Let's say you mark up a chart, okay, you determine that the market's going to continue to go down. You don't just enter a trade at the market price, right? If the market is at a good price, then yeah. But you have to select your price. You select where you want to enter the trade. You select where you want to buy and sell. If the market gives you that, you take it. If it doesn't, then you don't. It's as simple as that, right? You wait for the trades to come to you. You stalk, you hunt, and you wait for the trades to come to you. You don't chase them. Okay? Make note of that. So we will knock it off right here. Make sure you look over this video, practice on your own, and prepare questions for next class. All right. It was a good run. So have good luck in the market, and I'll be sending signals, and we'll have our class next time. Have a good night.